So what we're seeing at the moment, which might be terribly exciting for the bulls, gold rushing up to, looking as people forecasting it's going to go 4,300 or whatever. That's just the start of it. This is actually, I think, a crisis developing within the precious metals market. And what we see in gold, we're also seeing in silver. The story in silver is obviously different, but China, again, has been a big player in silver as one of the leading global mining nations. They haven't really understood it yet, but they're sort of gradually waking up to the fact that, they don't really know why, but they really should have some gold. It's the only game in town. So, they will go, and the same with SLV. It's going to put huge strains on, the combination of COMEX and London, that's for sure, because it's just not there.
Renowned economist Alasdair Macleod, who is well known for his in-depth knowledge of credit systems, gold markets, and monetary history, warns that the system's inability to provide actual metal when it's most needed poses a greater hazard than volatility alone. He cautions that paper gold markets may collapse as trust wanes, leaving only those who own actual metal with real protection. The world's financial system is extremely close to collapse. Markets are now more leveraged than ever before, with FINRA reporting over $1.2 trillion in margin debt. A single severe decline could trigger a series of forced liquidations, resembling the disastrous cascades that occurred in 1929 and 1987, when speculation and reality clashed. Today's risks, however, are heightened by record global debt, rising interest rates, and a financial system based on layers of paper claims rather than actual assets, in contrast to those previous disasters. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing. Share your thoughts on the market in the comments below.
So we've got about a few months left in the year. What do you forecast ahead for the next 3 months or so? What do you see by year's end here?
Well, I think there's an increasing likelihood that the credit bubble will burst, come to an end. Now, if that happens, it's going to unleash, I think, some major developments in the markets. Apart from anything else, something like a 1987 style crash or a 1929, October 1929, both October, incidentally. This is quite a dangerous time historically. That style, that sort of scale of move down is going to create huge, great problems because the amount of leverage in the market is at record levels. Just look at the figures coming out of FINRA. The end of August, the level of leverage was about 1.2 trillion, I think, from memory. And that's up 4 or 5 times since over the last 10 years. This is huge leverage in the market. That gets unwound very, very quickly. And you find that, if the market drops 25%, when it starts, then, a lot of these leverage positions are going to be just completely blown out of the water. And the experience of a deflating bubble, particularly when you've got the complexity of tariffs put on top of it, trade tariffs and all the rest of it. It's just like 1929, and this is not good. But this time it's even bigger. It's bigger than 29. A lot bigger. So whether it happens in the next month or two, I don't know. I think it's quite likely to happen by the year end. And then, of course, that's going to have a huge, great impact on bullion, because if you think about it, every market's going to be in the same position. Some people will have, think they got wonderful profits in bullion and they'll cover the losses by selling bullion. But apart from that short-term effect, what we're likely to see is a flight out of paper into physical bullion. Just get the hell out of paper. It'll start in the financial markets, that move. So it would drive, and think of it from the point of view of a large investment management organization with their clients holding no gold at all, which is par for the course, long up to their necks in tech stocks and whatever. When that starts collapsing, where do they go? The answer is they try and get out of the falling stocks as quickly as possible, and anything where they can sort of rescue something. But on the margin, they're going to be saying, well, the one thing we haven't got is bullion. We've got to get into safety. And I think that's what the foreigners will do, probably more, initially anyway, more than domestic institutions. The problem is, Danny, that there just is not the bullion there to satisfy the potential demand coming out of institutions. And we should note that analysts at the big banks are now forecasting higher gold prices, but their investment managers haven't got any. So what do they do? I mean, where do they go? If you look at how much gold is really required to satisfy just 1% of portfolio allocation across the world, you're looking at 25,000 tons of gold at current prices. Now that is just not there, because China's cornered the market. And nobody else wants to let it go either. I mean, okay, a few traders and so on who will let it go. But, if we're talking about physical, and we're not talking about paper. If we're talking about physical, it's just not there. And the paper market, what does the paper market do? I mean, basically, what we can see is a likely major move into metals because they are performing gold and silver anyway. And because it's not there, prices go through the roof, crisis ensues. So I think this is the danger. I mean, I think it would be dangerous, I think, for me to forecast this as such. So I don't come out with forecasts, but I just look at the dangers, if you like, that are likely. And this to me is the big danger at the moment. Nobody's got gold. Nobody's got physical gold in the West. They're running an awful lot of portfolio money. And at some stage, they're going to try and move over. And when you've got, people like Goldman Sachs saying, we expect gold to go to 4,000, whatever, by the end of. I mean, I don't know whether they're talking any sense at all. Probably not. They're probably just looking at the charts. But you can see how, this actually leaves the investment managers who got none in a bit of a pickle. What do they do about it? And the gold isn't there. They can't get it. I mean, you've got parties who we don't know who they are, who are standing for delivery on COMEX as the only way in which they can get any physical. And so far this year, I mean, I reckon it's about 950 tons has been stood for delivery on COMEX this year alone. By the end of this year, it's going to be well over 1,000 tons, probably closer to 1,500, I think, the way things are going. There was a very big delivery yesterday, 66 tons or something, and silver also. COMEX wasn't meant to be for this at all. But people are using it as a means of getting bullion which they can't get elsewhere. I don't know where to get this stuff. I'll just go and buy GLD, and they can have the damn problem. So, I mean, I think the ETFs are growing in size, but I think it's only just started. People they haven't realized that gold is, in their terms, in a bull market. In my terms, the currency is actually in a bear market, which is actually far more serious. They haven't really understood it yet, but they're sort of gradually waking up to the fact that, they don't really know why, but they really should have some gold. It's the only game in town. So, they will go, I mean, and the same with SLV. I mean, it's going to put huge strains on, the combination of COMEX and London, that's for sure, because it's just not there. So where does the manager of GLD go for it? It's going to be interesting.
The market for precious metals is about to undergo a historic shift. Prices for gold and silver are rising due to tightening physical supply and drying up liquidity, not speculation. Tens of tons of gold and more than 1,000 tons of silver are being asked for physical delivery on the COMEX exchange, which was never intended to handle massive volumes of real metal. This demonstrates that conventional supply chains and refineries are unable to meet the demands of the global market. China is at the center of this change, having been stealthily amassing gold for many many years. A third of the world's above-ground gold is currently controlled by the Chinese government and its people, putting Western markets in danger of running out of real metal. The pressure on the paper, gold, and silver markets is getting worse as international banks and institutional investors start to recognize how little the genuine supply is available. Even a small shift of institutional money into real bullion could expose massive shortages. With currencies losing value, deficits soaring, and confidence in fiat money fading, investors are turning to hard assets for protection. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Elucidate, care to let us in on what you think is most interesting?
Yeah, well, particularly in precious metals markets. I mean, the thing that's fascinating is the squeeze on the system. I mean, they're not overbought, and a lot of the time you see, prices rising while open interest on COMEX is contracting. I mean, it's an extraordinary situation, and we're hitting new high ground in gold and silver in particular. I mean, all this indicates is a lack of liquidity. And fascinatingly, the standard deliveries on COMEX, I mean, it's absolutely huge. Something like 66 tons, 65 tons of gold, and sort of over 1,000 tons of silver. I mean, these are enormous amounts for a market which was never intended to act as a delivery mechanism. And I think it sort of indicates that people wanting gold or silver in size, they can't go to the refineries because they're all sold out. They'll deliver in sort of join the queue sort of thing. So the only alternative really is to go to the futures markets, pay a premium, if you like, to pick the stuff up and then stand for delivery. And that's what's happening. I think, in both cases, I think China has got quite a lot to do with this. In the case of gold, China has more or less cornered the gold market. I put out a note today analyzing how much gold China actually has, China and her citizens. If you want to read it, you can pick it up on my Substack. But I reckon, and I'm fairly confident of these figures, that China has something like 75,500 tons between it and its citizens. Bear in mind that it's been accumulating this since 1983. So we're talking about over a long period of time. Also in a big bear market between 1983 and 2002. And it was at a time when we were selling gold hugely. I mean, we were selling not only our gold as an investors, but also the central banks were selling gold. And not only were they selling gold, but people were taking delivery of gold, leased gold, and selling it into the market and putting the funds into US treasuries. And the gold disappeared. Guess who was buying it? China. I mean, the point is that if you look at the above ground stocks of around about 200,000 tons, look at how much gold China has got. We're looking at 35, 36% of all above ground stock. It's leaving everybody else short. It's a short answer. And so we're seeing the squeeze now. And, the major US banks, amongst others, are beginning to get bullish on gold. And they manage portfolios which have no gold. And, at the moment, while, the Magnificent Seven are soaring and, credit bubble is intact, perhaps underlying investors don't care too much. But when that pops and they've got no gold, they'll be looking at a very, very different situation. And I think that these banks are beginning to realize that they've got to have some gold. But if you look at just adding to the 0.5% which global portfolios own of physical gold, if you take that up by 1%, they've got to find 25,000 tons at current prices. It's not there. It is not there. And this buying is going to happen. Of that, there is absolutely no doubt whatsoever. So what we're seeing at the moment, which might be terribly exciting for the bulls, gold rushing up to 3,900 and, looking as people forecasting it's going to go 4,300 or whatever. That's just the start of it. This is actually, I think, a crisis developing within the precious metals market. And what we see in gold, we're also seeing in silver. The story in silver is obviously different, but China again has been a big player in silver as one of the leading global mining nations.
Alasdair Macleod issues a severe and thorough warning of the escalating catastrophe in the world's precious metals and financial markets. He clarifies that the lack of liquidity in the system is causing gold and silver to be pinched rather than overbought. The COMEX market, which was never intended to be a significant supplier of physical metal, is already dealing with enormous delivery demands, roughly 1,000 tons of silver and 65 tons of gold per month. He claims that this exposes serious flaws in the paper market structure. Large buyers may now only obtain real gold or silver through the futures markets, where they must pay premiums to accept physical delivery, as refineries are running out of stock and waiting lists are getting longer. China is a key actor in this change, according to Macleod. He calculates that between the Chinese government and its people, China owns about 80,000 tons of gold, or about 35% of the world's total above-ground gold reserves. This has caused a structural shortage of physical metal in Western markets, which is now becoming apparent as more institutions become aware of how little exposure to gold they actually have. Macleod claims that silver is exhibiting comparable stress. For years, China has been refining and hoarding silver, preventing a large portion of it from being sold. Because of the increasing dominance of Eastern markets, pricing is no longer controlled by Western financial. As a result, Western banks and institutions with sizable short positions are under increasing pressure. Unaware of the system's fragility, even some managed funds continue to have partial shortages. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.